Hi, everyone, and welcome to Media Capital, a podcast where consumer investing meets media innovation. Today, we're thrilled to welcome Tim Fung, founder and CEO of Airtasker, a marketplace for local services that connects people who need work done with trusted and skilled locals who want to work and earn extra cash. In this episode, we will talk about Airtasker's journey from launching in Australia in 2012 to expanding into the UK in 2018. And most recently, the US. Some of the learnings from building a marketplace and scaling internationally, and Tim's unique approach to growth using media capital to accelerate a brand in new markets. And hello, Tim. How are you?
Hi, Dana. Thanks for having me.
It's just really exciting to see where you got the brand right now in the US. I remember chatting just before all of the entire wave of announcements they were seeing it live. We'll talk about that in a moment. But before we start and talk about the business, I always like to ask founders and our guests just a bit more about their life experience. What sort of values or kind of challenges shaped you as a founder? What's your life story before Airtasker started?
Oh, interesting. My background, I guess what you'd end up calling what I've done in my career more recently is being an entrepreneur or being a founder type. But growing up, I guess genuinely, that probably wasn't really a thing. When I was growing up in high school, that wasn't really something that you thought about doing. And frankly, I didn't really think about like my career and stuff. Going in high school, I was just having fun. I guess I probably did have the attitude of if something was broken or if I wanted something, then I'd go out and just have a crack at fixing that problem, getting that thing that I wanted. And during university, for example, we loved driving our cars and probably loved it too much and being a bit naughty, driving around on the streets too fast, and found that we could go to the racetrack and drive our cars faster in a safer place and have a lot of fun doing that. But we couldn't really afford it because none of my friends came from wealthy backgrounds, neither did I. We set up a thing called Circuit Club. And what we did is we basically said, let's just go and hire out the racetrack. And if we hire out the whole racetrack and we sell enough tickets for other people to go to the racetrack, then we can come for free. And I remember we did our first event, and I think we lost about $50 on the first event. It cost about $8,000 to hire the whole racetrack. We lost about $50. And we were all just so stoked that we'd solved this problem of us being able to go for free. And that actually carried on for about 10 years, 12 years, and took us to racetracks like all over the world, actually, like in Nürburgring in Germany and Spa-Francorchamps in Belgium and places like that. And from a young age, if I want that, then I have no money, then I have to solve it. And I guess that's probably one aspect of what later became an attitude of, hey, people in the local services space, it's really hard to connect with people, to trust them to be able to do stuff for you, but there's so many people out there who could do stuff for you. So why is that hard? And why don't we just go and give that a crack at fixing it?
And what inspired you to create Airtasker? How did this idea came about?
It's quite funny because I think when you hear about startup stories, it often sounds like someone came up with this idea and then the next day the website was just there or the app was just there and then the things just carried on from there. And it's actually like a really long journey. But when I think back to what really got us to actually wanting to start this business was I asked a friend to come and help me move. And my friend Ivan has a business where he sells frozen chicken nuggets. And so he's got a truck that he uses to do deliveries. And apparently a lot of people would ask him to help them move because when you're in your 20s, you don't want to pay for a white glove service to have someone help you move because it costs like hundreds or thousands of dollars. And so we'd always just put stuff in the back of his truck and move it. It was quite funny because it's a refrigerated truck. So, you'd put your couch in there and it'd come out the other end a bit cold. But anyway, that just got us thinking, why is it that you ask your friends and family to do all these kinds of jobs when there's so many people out there that would love to do this job to actually make some money rather than hassling your friends? And so that was the genesis or the spark of the idea. My co-founder, Jono, and I, we worked for another startup, which we helped build before Airtasker. We had a bunch of other ideas, and I would share them with my roommate at the time. And he was an investor. And he would basically say that every idea I had was total crap. He would just be like, that is the dumbest idea I've ever heard. And when I told him this idea, oh, what if it was like a marketplace where we like connect people in the local area to do jobs? He's like, that's actually the least dumb idea that you've ever come up with. And so I was like, that's a good endorsement. And so that was the journey that kicked it all off. And it took probably 6 months to take that from an idea to even building something.
Actually, this is probably a great moment to talk a bit about the features of Airtasker because people are familiar with the brand, but also familiar with TaskRabbit. They had a lot of initial success, but I think there's several factors that led to its struggles. Some could be regulatory issues, quality control, safety concerns. As you said, you're basically trusting a stranger to come into your house. And then there were other problems with scalability, right? And I think they were also, if I'm not mistaken, just relying on one single revenue stream. And then I'm looking at Airtasker, and you can argue that the same factors that broke TaskRabbit, you finesse them or improve them, and they actually became the growth engine for Airtasker, right? I mean, you're a community-based model. You're not essentially getting involved, right? You're just providing the platform and let people connect with one another. The gross margins, which are fantastic, and then you're supplementing that with the media capital investments. And then finally, you are completely horizontal. You're not just relying on one revenue stream, and you're not just in a specific sector. It's not just about, let's say, cleaning, but it's also about a very specific task. I'm sure there's been a lot of thinking that went into these features, but how did you build basically this model to be where it's today? How Airtasker evolved over time?
So it's really interesting. I think there are a couple of things that are sort of like fundamental to the platform. I'd caveat all of this by saying, I think in general, when you look back at something over maybe, we've been building this business for close to 13 years now, so 12 years. And when you look back on it all, a lot of it can look really strategic. Someone planned it all out and someone wrote a paper and had a thesis and then just built the thing. But I think the general rule has been we've tried a lot of things. Out of 100 things, 99 fail, one works. Ooh, let's take that one thing that worked and let's just do a little bit more of that. And then repeat that. And if you repeat that enough times, you're probably going to build something. So the fundamental things I think that are critical to our business model is, first of all, we believe that people are generally good, and they want to do the right thing. And so if you create accountability and transparency and then you let people go and do their own thing, then they're going to want to do the right thing far more than they're going to want to do the wrong thing. And people would ask me very early on with Airtaskers, couldn't someone book someone on Airtasker and then invite them over to their house and then punch them in the face? And I was kind of like, yes, I guess that is possible. And that is possible. It is possible that someone does it to you. But that's possible if you go to the pub and you're having a drink. That's possible that it's there. That's possible when you're walking down the street. And the question would be more like, why would that be more likely on Airtasker than somewhere else? And I actually think that because of what Airtasker does, which is create transparency and accountability, i.e., we have a record of everything that's happening through our platform, it's actually much less likely to happen on a platform like Airtasker, and actually much more likely to happen out on the street or in a pub where that sort of stuff isn't being recorded. We have this like fundamental belief that if you let people go, you create the transparency and accountability, people do the right thing a lot more. And that hypothesis is very much played out to be true. It is actually some incredible things happen in a marketplace like Airtask when two people connect directly. For example, Tim and James, is that Tim doesn't want to pay the least amount of money. Actually, when he meets these people and they come over to his house and they're cleaning or they're doing some gardening, when you actually meet someone face to face, you're not thinking like, how can I pay this person like $3 instead of $4? In fact, people go, oh, geez, this is hard work. I really want to make sure this person's paid well. Now, that's different if you're working with a corporation, because I think we all know that if you are buying something from Amazon, you definitely want it for the cheapest possible price. But that's not so true when you're actually dealing with someone directly. We created a feature a few years into the business where you could increase the price of the task after the task had been agreed. You might agree to do a task for $100. When the person comes over to your house, you could increase the value of the task to $200. And we actually found that 2/3 of the time, that price increase was actually initiated by the customer. So it wasn't even the worker saying, please pay me more. It's actually the customer going, oh, this doesn't really feel fair. I actually want to just pay you a bit extra. And I think that was like a fundamental belief. And because we believed that people were going to be more good than bad, that's how we said, let's make this as an open community. Let's not make this as you're a tasker, you're a worker, or you're a customer. We said, everyone's just a person. Just jump in there, and if you want to post a job, you post a job. If you want to do that job, you can do that job. But we didn't say taskers are one kind of people and customers are a different kind of people. Everyone's just a person. What that unlocked is that you could use Airtasker for almost anything. When you think of perhaps a lawyer, they might be like, hey, I'm going to use Airtasker because I need a cleaner. I'm not a very good cleaner. I've got a very busy job. I'm at work all the time. But the cool thing is that the cleaner sometimes needs a lawyer. So the cleaner can also post on Airtasker, hey, I need some legal advice about something. And so by creating that sort of anyone can join, you created all of these different kinds of skills that could come into the marketplace. And it turns out that's made Airtasker pretty special too, which is that you really can use Airtasker for everything from everyday stuff, cleaning and gardening, through what you would call like traditional skills like lawyers and accountants and tax consultants, all the way through to like these things that you just never thought possible. In London, we had someone use Airtasker to pick the name of their second child. I mean, I can't come up with ideas. I want someone to come up with this for me. Or we had someone talking about how when there are too many influencers at a monument, that they wanted an Airtasker to just come in and just jump into the photos to photobomb and stuff like that. So it's like all these ideas that you can use Airtasker for. And I think that is what makes it special, but it's all built on that belief that people are more good than they are bad.
Do you think the sense of community and this transparent pricing model is what is stopping, let's say, a tasker or a customer to go straight, like to bypass their tasker? Because it's probably something that you get asked a lot. It's the same as with Airbnb and a lot of the marketplaces, right? Why, once you've done a job once, twice, can you bypass the platform?
I think there's two components of value that I think the marketplace generally provides. So there's two buckets. I'm sure it can be much more broken down, but I think one obvious one is what we call like connecting value. So the value being introduced to someone. And then there's what we would call like handling value, which is like handling a transaction, things like payments, insurance, messaging through the app, customer service, if things don't go well, things like that. And I would say that the connecting value has the attribute of being something that people are willing to pay a lot for upfront. But once you've had that connection, then you're not going to pay for that anymore. The handling fee is something that you're not going to pay that much for upfront, but you're willing to pay for it many times over. And I think one of the big mistakes or issues that a lot of early stage marketplaces had was that they were trying to charge the same fee on every kind of job. But that kind of didn't make sense, because the first job you're probably willing to pay a lot for because you need that connection. And that connection does not come free for that marketplace. Like generally marketplaces have to spend a lot on marketing to bring those connections together. So I think it's really important that both customers and taskers feel like that's valuable. Marketing is the valuable bit and the connection is very valuable. And then the handling stuff, you have to charge a different sort of price for that. On Airtasker, the first time you deal with a customer, you're generally going to pay a higher fee. But once you're connected to that person, you can keep rebooking them and we charge a much lower fee. And that sort of makes sense because you've already met that person. You don't need us to introduce you again, but you do want to use us for payments, insurance, and things like that. And it makes sense to just pay ongoing, but to have a much, much lower fee. So we're trying to get a little bit smarter about that, thinking about what is the value exchange with our users to get that right. But I think that the big lesson there is pricing is so important because it's a marketplace. And so pricing isn't like this small thing. It's actually like a very large component of what the marketplace actually does.
And Tim, you mentioned about the marketing costs that go into acquiring users initially. I want to talk a bit about your growth strategy and the fact that I think it's quite unique that you believed in investing in brand advertising quite early on in the business. Right now, the brand has been in the news a lot lately for its latest media capital fundraisers in the US, and not just the US, but more recently also UK. This is not something that is new to you. You took on media capital investments early on with Channel 7 in Australia. The question I guess everyone is asking is probably why haven't you done the traditional path of investing a lot in performance marketing and how that initial interaction worked for the brands? I would love to know more a bit about this. What made you actually choose brand advertising so early on in your stage in Airtasker's journey?
I would say about growth channels for building a marketplace, or at least what we've discovered, is you need a lot of them. And the reason why you need a lot of them is because different things tend to work at different stages of the marketplace. Super early stage, maybe just simplify it, super early stage, a scaling phase, and then like a established phase where you're trying to monetize the marketplace and create profitability. So different channels work and are better at different times. And I think that's made extra complicated because when you think about what a marketplace is, part of the product is the app, like the software that you've created, but a large part of the product is actually the people that are inside or working through that app. Like if you think about from any one user's point of view, what is a social network? It's not really the app. The app's like a gateway to meeting all of these other people. And those people like the experience or the product. And so that's made extra complicated because in a marketplace, even before you start really marketing, you're just trying to create that product experience. And you need people to be able to do that. So super, super complicated. How did we get into the brand marketing thing? Again, was sort of forced into it. And then it became a strategic thing for us. So basically, back in 2016, I was raising capital. It was probably like our series A or B. We were talking to a lot of people. And one of the groups that came and talked to us was Channel 7, which is a television network in Australia, a commercial television network. And they were like, yeah, we're happy to invest in cash. We also want you to take a bunch of advertising or media contra and give us equity for the cash piece and then also for the media contra. We were a bit skeptical because we're like, oh, if you read every blog, it tells you to spend it on performance marketing and get really good at that, or get really good at SEO, work on like CRO, conversion rate optimization. So why are we going to invest in on TV? Isn't that like what Coca-Cola and Amex and brands like that do? And so we're a bit skeptical about it. But once we'd been forced into it, we got pushed off the cliff. We're like, you know what? We've got a couple of $1 million of media value here. We may as well make the most of this. And so we actually filmed an ad, and it was called Like a Boss. It was a bit of a irreverent, funny ad where people would dance around after they've done their tasks and be like a boss. And so we put it up on Channel 7, and immediately we saw this bump. And it was expected because we're going to talk to a lot of people overnight, got this big bump. And we had some scale at the time. We're maybe doing $1 million a year in revenue or something like that. And we thought this overnight jump of 30% week on week. And that was exciting for us at the time. And by the way, we're spending millions on TV to generate this. It wasn't good short-term ROI, but we were forced into it, so we just did it. We had this really good run. And we looked at the 5-year period over which Channel 7 invested with us. And we actually grew our brand from about 6% to 60% in Australia. We had grown our revenue about 25x. So we grew it from about $1 million to about 25 million. And then when we listed the company, we did an IPO in Australia. We actually were able to return capital to Channel 7, who exited at that time, and they made about 5x their money. There's no way we could have done that without that brand awareness growing from 6% to 60%. And there's no way that Google Ads would have taken us there, or just purely PR would have taken us there. And so you had to really look at things in like the big picture scheme of things to see that this media really did work for us. And I can say that with a lot of conviction that, maybe we would have gone in some other direction if we hadn't come across this. But certainly it was, I'd say, the largest ingredient to get us from sort of that low brand awareness to that high brand awareness, which was necessary to scale. It was also necessary for us to become profitable. Because I think one of the other things is like you can invest in these other channels, but every channel has risks and different sort of economics associated with it. So you look at something like Google Search, really predictable, really well targeted and good for that, really bad to like scale in general. Or SEO appears to come for free, really great if you can build it up steadily, but then really risky because we can see now if you do a Google search on mobile, you basically get a Gemini answer, you get a map pack answer, you get about 10 FAQs, and you might be 3 scrolls down before you get one SEO based link. So if you built your business on SEO, then that's pretty hard. Everyone's shifted to mobile, everyone's shifted to AI, and desktop traditional internet searching is dead. So every channel has risks too. But one thing that doesn't have risk is you build your brand, you own your brand, and people know you for what you are. And that's really important.
Exactly. I think it's the hardest to build a brand on digital platforms. Perhaps another aspect which is quite unique to Airtasker is that it's the nature of the marketplace where it's a lot based on trust. And I think a lot of the kind of conversations we're having or the sort of investments we're looking at are marketplaces. We've seen marketplaces performing the best on TV because it's about that trust and also always driving probably one side of the platform, the supply and demand, and then that has a multiplier effect when it comes to scaling the other side of the platform. It's interesting how almost something that happened, not a mistake, but I suppose, as you said, you're forced into it, became something that over time it became quite strategic and very systematic for Airtasker. It took the brand about 6 years, I think, to expand to other markets. And the first market, if I'm not mistaken, is the UK after Australia, where you closed the deal with Channel 4. Talk a bit about the mechanics of that, because I think it's a really clever structure that you adopted with Airtasker in every country you go to, and how you structure this with the media investors that you partner with?
I guess most things happen because something becomes blaringly obvious to you, and then you go do it, and then look back on it, and then people go, "Oh, that's so strategic." But I must say, we sort of got nudged into various directions. I think what nudged us in the direction for the UK is that our Australian business had been going for a long time before we launched in the UK to do media for equity. And in Australia, we were actually like cash generative. We were profitable and we were making money. The way that we were being valued as a company was quite low. Like, so people were going, oh, as a multiple of revenue, maybe you're worth maybe 1x revenue or 2x revenue. We were seeing like startups getting valued at 10x revenue, 20x revenue. It didn't really make sense for us to do investment into all of Airtasker because it was like, oh, it's this sort of bundle of a startup and a profitable company. And those two things should be valued quite differently. Also, when you think about it from an investor's perspective, they're going to help you grow one area of your business. They want to get like maximum exposure to that part of the business. They don't want to get mixed up with everything else. When you take that even further, media for equity, you're tending to work with media partners who are really strong in one country, but usually are not global, or at least not in like every country around the world. When we met up with the guys at Channel 4, we said, rather than you investing into Airtasker Global, which is a mix of things, we spun out Airtasker UK. And we said, that's its own business. And why don't we give you like a significant chunk of Airtasker UK rather than a small chunk of Airtasker Global? Airtasker was a listed company. And what we did is we spun out every country into its own company. And we now do media for equity into each of those countries. And I think that has a really great outcome because it means that each of the local media partners gets significant equity stake in that business. And it's also great for us because we know that they are very aligned to wanting to make that country really successful. And that is where their assets, whether it's TV or radio or podcasts or outdoor, where it can make the biggest difference. So it doesn't make sense to expose them to all of the other stuff that's going on. But then I think the thing that we did that was interesting is we said, because it's a private company, like you need an exit. And because it's a subsidiary of Airtasker, how are you going to get that exit? And we said, we're already a listed company. So we already have a path to people getting liquidity. We'll just come back and buy you in 5, 6, 7 years. And we agreed that with each of the investors. We said, just tell us when you want to exit and we'll come and buy it out. And we can do that because we're publicly listed. And I think what was cool there is what we said is the way that we're going to value how we buy you out is based on how much revenue we're doing in that local company, which is obviously where we want you to be incentivized. And we're going to take the revenue multiple that we have as a listed company and apply that to the revenue that you're doing locally. And I think why that's so cool is because it means that each of those local media partners is focused on the local, but they're also really excited about our global success. And so they're not saying, oh, you just don't do anything else, just focus on England, only spend time in the UK, don't do anything else. They also need us to keep scaling the business globally. And so they're cheering us on when we talk about, oh, could we launch Airtasker in another country? They're like, yeah, let me introduce you to some people. Let's make that happen. And so what I have found, and I think this is like relevant to marketplaces a lot as well, is it's all about alignment of interests. If you can get everyone wanting to swim in the same direction, it just makes your life so much easier. It does mean that you need to share the pie with people. You've got to be like, I'm willing to say to you that you get part of the success. I can't be greedy and keep it all. But if you do that, you wake up every day and people are trying to help you rather than people trying to stop you from doing what you want to do.
They're vested in your success. But I think what's really interesting and really clever is that you have a real timeline on that liquidity event, which is in the end, these media investments happen for a couple of reasons. One, it's a financial return for the group. So I think this is extremely attractive for a lot of the media companies. Before we move on to the next segment, I want to introduce this shout out section, which we have in every episode, and just ask if there's somebody perhaps that you would like to mention that made a big impact either on Airtasker or even on yourself as a founder.
There's like so many people when I think about contribution to us over 12 years. And so it's like the hardest question, but I'd probably reserve the shout out for a good friend of mine, Peter Hammond, who was actually like our first institutional VC investor, and has been with the company for going on 12 years now. When we first started, he was definitely like a VC. It was pretty full on with due diligence and questioning and documents, all this kind of stuff. But he has gone on to become a really amazing supporter of the business and of me throughout like multiple stages from early stage through to frankly facing a lot of crises to listing the company, facing more crises, and then scaling the business. And yeah, just a real believer in Airtasker and in me. And I think what's really profound is like he really didn't have to be. There are a lot of times where he could have just dropped us or dropped me and just said, you guys work it out. But he stuck it out. I think you couldn't really ask for more than that in a backer or a supporter or an investor.
Speaking about the challenges that I think every founder is facing and also some of the learnings, I want to talk about things that are perhaps lesser known about how Airtasker evolved and some of the lessons that you learned from building essentially a marketplace. And as you mentioned, really difficult to build both sides of the platform. Is there perhaps one lesson that you wish you known earlier in that journey of scaling Airtasker?
I think that the thing I would probably say is try to enjoy or embrace being uncomfortable about not knowing what to do next and enjoy that journey. But ideally, you can do that with a sort of positive mindset rather than like an anxious or stressed mindset. And if I could think about something that I would have done differently, it would be to work hard, work 12 hours a day or 14 hours a day, whatever it takes to build your startup. But outside of that time, or even within that time, try to enjoy it, embrace it, and be part of that journey. Because I think when you look back on it, whether it turns out to be a success or not, you'll probably look back on those times in your life and look back on them fondly. If you can have been present and enjoyed them whilst they're happening, that would have been pretty cool.
Enjoy the ride. I think I can probably relate. It's difficult, especially depending on the stage we are in the business, right? We haven't spoken a lot about the fundraising journey early on, but a lot of consumer founders probably listening to the episodes that are earlier stage and fundraising. I think they can probably relate to the pain of doing that. It's a very interesting time as well, I think, for consumer investing. Actually, quite curious just to get maybe your opinion on some of your friends or entrepreneurs that are in the consumer space and fundraising. And you've gone through an IPO. We see like half of the most successful IPOs out there are consumer businesses. But when we look at where the funding goes to, and that's probably the largest source of stress, to be honest, about 17%, I think, of the venture capital funds are allocated to consumer businesses. Why are we making this mistake? Why are we not supporting more consumer businesses and marketplaces than B2B SaaS?
I think it's probably similar to Hollywood. You look at Hollywood and you're like, how come there's all these movies getting made and most of them suck? And it's like remakes of old things or book adaptions. How come there's no original awesome movies before Marvel came around? That people were actually like making all these unique movies. And I think the answer is probably just risk. And when you do these consumer startups, I think if you make one and it's awesome, it is awesome. You look at Google, Uber, Airbnb, holy crap, $100 billion plus businesses and going all the way. Those are massive businesses. I think with B2B SaaS, there's a much larger chance that you can build a very good, large, risk managed business. That's probably the reason why, like, most people would be like, you know what? I'm actually happy to make 3 times my money and have a good chance of making 3 times my money rather than doing consumer, because consumers do 100 times the money or maybe not.
Yeah.
Maybe it just goes to ground.
That is one of the largest costs, right? I think VCs absolutely hate raising a round, telling them that 50% of your round goes into advertising. I think it's just a bit too early in this new asset class, or essentially called media capital, to probably say for sure that having a media partner on your cap table alongside venture or private equity money actually accelerates the growth of that business. We're not there yet in terms of getting to those conclusive numbers, but there's been great stories and returns for both sides. So I think that could be quite interesting, something to maybe look at over maybe the next decade or so as we get more success stories out of that.
Yeah, the argument would be cash you can spend anywhere. If you do a media deal, you have to invest in media. So I guess it just has to be the case that it's the right time and place for that media deal to make sense. And if it does, it's going to be amazing. But if it doesn't, that's probably where it gets hard. You probably just got to look at it at first principles lens and go, is this the time for that business to do that? And if it is, it can be an incredible thing. And I would actually say it can be worth a hell of a lot more than cash if you get it right, because you actually got an organization who's truly a partner with you. One of the things that I loved about Media for Equity is you're getting like this big organization who understands the local people and understands the local market, wanting to promote you and push you. And it's strategic in that sense, but it's also not strategic in the sense that they're not trying to like pseudo compete with you. For example, If you're a marketplace for cars and then a sort of like car brand wants to invest into you, you do have to be a little bit worried because you're a little bit like, yeah, okay, you're my friend in some way, but maybe one day you're going to come and kill me or you're going to come and do something to the business. Whereas one of the great things about media in general is their business is promote companies. And that makes total sense. There's no funny relationship stuff going on. It's very clear. We're trying to build a marketplace for local services. You're in the business of selling us advertising to do that. If we do a deal, yes, you're selling us a lot of advertising, which we want. So we're willing. Everyone's really open about that. And I think that's really healthy.
I think you put it perfectly. I think it's about just finding relevancy between the properties and the brand, but also making sure that you do it at the right stage, because that can actually also equally turn up to be very detrimental for the business. And you need that cash to support whatever TV above the line media for the campaign you do to keep that momentum going beyond it. Tim, we are approaching the end of the episode, and I have a quick fire round of questions for you. And I'll start right away with the first one. What advice would you give to your younger self?
Think with first principles and know which bits of advice are good to take and which bits are just good to take on note.
That's the hardest, isn't it? It's when you get bombarded with a lot of feedback from advisors and board members and investors. What would be then your tip for early stage founders building a marketplace?
I think it would be to know what actually drives your customer experience. Is it range? Is it quality? Is it volume? Is it price? What's actually making your customers tick? I think a lot of people jump instantly to quality, and that can be very subjective. What's quality to one person isn't quality to another person. And number two, if you look at a lot of successful businesses, they would not be built on what most people would define as quality. Only a very small number of businesses really are driven off that one vector. I would say just know what customers actually care about.
And what's next for Airtasker? What's next for you?
Really exciting. I think as we scale media globally, one of the really exciting things is that we can invest a lot into the brand and the content on a global level. And so we've been looking at a lot of interesting partnerships and content. I'm sure my team would absolutely kill me if I shared anything more about that, but we've got some exciting announcements lined up in the next few weeks. Yeah, watch this space. But yeah, really excited about scaling our brand globally and then continuing to invest into the product at scale.
Are there any markets lining up on your roadmap anytime soon?
Our UK and US markets, we've got our hands pretty full, and those are very big markets, and we raised over 50 million in media capital last year. So we've got a lot of work to do to actually deploy that. On the other hand, one other really powerful thing about scaling via brand is that it's fairly scalable. Like it's got high leverage. You create content once and then you push it out across a lot of things rather than if you think about a lot of these like social platforms and stuff like that, every day you're trying to come up with a new TikTok. That's a lot of work. Every day you're just running on this treadmill to make content on behalf of TikTok or on behalf of Insta. That is another really powerful thing about broadcast media. Now, means it scales a lot, means you can do a lot of countries quickly. So our focus is US, UK now, but that might change pretty quickly.
Awesome. Thanks so much for your time. It's great to hear how you build this business over time and also the really interesting approach that you took to media for equity and just sharing very openly what worked and what wouldn't work for a marketplace. Thanks again, Tim, for your time. Really appreciate it.
Awesome. Hope it's helpful.
Thank you for joining us on Media Capital. And if you enjoyed this episode, please leave a review, follow the pod, and subscribe at mediaforgrowth.com. Thank you.
MFG invites you to the inaugural London Investors Breakfast, an exclusive gathering for top investors and media industry leaders on April 3rd. Join us for high-impact networking, insights on growth opportunities, and a unique breakfast experience designed to spark collaboration and fresh ideas. This invite-only event has limited spots. To register, email Diana at mediaforgrowth.co with your details.